Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indexes, S&P500 and Nasdaq100, followed by the DowJones30. But just quickly before we start today's video, anyone who's interested in joining my Signal service as well as receiving my daily market research, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's video, so just scroll down, click on the link, and that'll bring you to this website. Once on the website, if you scroll down once again, and under the monthly subscription section, you can sign up for a very small fee of $29. But let's get started with today's video. Very interesting price movement. We saw the S&P 500. At one point, it was trading down around 1.10%, but we have actually paired some of those losses going into the close, and we currently find ourselves trading at 5,211. I've been saying for the past couple of weeks now, the trend is your friend until it's the end, and we haven't yet seen the end. We've continued to respect the bottom of its uptrend. 5,200 was a very important area. If we closed below that area, then that would have been a break of this uptrend. But the fact that we managed to close back above it is very positive, and I think that actually indicates that we are going to see some further gains in the coming days and weeks ahead. I just want to make it clear that April, historically speaking, in an election year, is a very strong month with an average return of plus 1.32%. So that's very positive. And then just quickly moving over to Nasdaq100, very similar to the S&P 500. We did test the bottom of this uptrend, but we've closed back above it, back above 18,000. And this now, to me, indicates that we could potentially rally even further in the coming days and weeks ahead. And then just quickly moving over to the DowJones30, exactly like the S&P and the Nasdaq100, we tested at the bottom of this downtrend. We actually didn't break below it. We tested the bottom, but we bounced very nicely. What caused the pressure in today's trading session? Well, of course, it was the 10-year yields. Look at that. At one point, we spiked as high as 4.4%. And the fact that we've broken above the recent high that we set back on the 22nd of February, we can now get rid of that. And now, I'm just going to kind of have a look here to see what type of price action we have over the coming days. But I think if we can keep below 4.3%, that will be, very beneficial for US equity prices. Just want to quickly look over to the US dollar. Dollar actually declined today. That's quite positive. I am expecting a sharp fall in the US dollar and the 10-year yields, which will ultimately act as a tailwind for US equity prices. I think what's really important to understand here, team, is that there is still $6.1 trillion sat in market funds. What does that mean? That means that there's $6.1 trillion sitting in people's investment accounts, and all they have to do is sell bonds or just start to buy stocks, and that could be a huge boost to the current stock market. So any dip that does occur here, you're going to see some of that $6.1 trillion that's sat on the sidelines come in and buy the dip. So that puts us in a very good place for the foreseeable future. That's going to wrap it up for today's video, guys. Anyone who is interested in joining my Signal teams, and don't forget, you can visit my website, dailymarketmovements.com. The website link is in the description of today's YouTube video. If you click on that link, that will take you to my website, and you can just sign up here under the subscribe section where it says monthly subscription. Thank you, and I'll see you tomorrow.